All right, welcome in. How's everybody doing? Can everybody hear me and see my screen? Can you guys hear me and see my screen? Awesome, beautiful. All right. So first of all, thank you guys for all joining in. It's Saturday. It's 6 p.m. on a Saturday. I know this is probably the most horrible time to pick. And I will make sure not to pick this time going forward. I think we'll do more of a Sunday kind of like 6 or 7 or 8 p.m. kind of vibe. I think Saturday at 6 p.m. I don't think there are gonna be many people joining up today. We have about 400 of you guys in the Zoom right now, so it's not too many. But thank you guys all for joining in. This is awesome to see you guys all here and ready to jump into it. So today's session is going to be a little bit different. I'm gonna explain to you guys how I wish volume was explained to me when I was first starting to trade, because I think a lot of people misuse volume. I actually, honestly, I spent a little bit of the morning watching videos on YouTube on how to read volume. And the reason why I did that was because I wanted to see how other people portrayed volume and like how I can kind of do it differently, I guess, and talk about how I do it. And I realized that so many people, honestly, that 80 to 85%, maybe even more than that, percent of the people who make videos on YouTube are doing it because they make money through YouTube and they just try to generate views. But you watch those videos and any reasonable person who's been trading for maybe 2 or 3 years or a little more than that can tell you that they don't know what they're talking about because they don't even know how to use volume the right way. They're completely misusing it. They'll start talking about bullish or bearish volume as if it's meaningful, but they don't actually fundamentally know what it means, because you have to fundamentally know what it means first. Then you can learn to analyze it and actually be able to generate ideas and build confirmation through volume, because that's all volume is. Volume is just about building confirmation. That's all it is. And I want to tell you guys everything you need to know about volume in the next 30 minutes. So by 6:40, you guys are going to know everything you really need to know about volume. And that's the whole goal of today's session. Um, there may be other content out there that I didn't see on YouTube. That's good content. And there are certainly some good videos on YouTube that I can 100% stand by and back up. But that's only maybe 15 to 10%. There is a lot of very, very bad content out there. It's pretty horrible. But no, actually, Iron Trader I think is okay. But some of them are pretty damn bad. And I recommend that you steer very, very clear away from that. But let's actually jump right into it. Just to make sure, can you guys see right now my PowerPoint? Can you guys see my PowerPoint? Can everybody see what I'm looking at right now? Just type yes in the chat if you can see it. Okay, cool, beautiful. All right, so last session we talked about price action analysis. And just to introduce this topic, because I like to make there's not many of you guys in here. There's about 400 to change you guys here. We can go a little bit off on a side note, a little bit of a tangent quickly. Trading comes down to like three things, right? And we've gone over this a couple of times. Look, I myself um, didn't expect to be where I am right now in only about 5 years. But the reason why I got here in 5 years is because you need to just get rid of all the noise when you're trading. The only indicators you really need in your chart are volume, the actual candle bars themselves, and maybe VWAP or a very small moving average, and that's it. There shouldn't really be much else on your screen. You walk into a hedge fund or an institution and you see how they trade, and you're gonna see that they're very solemnly using the RSI or MACD or they're using those algo indicators. They're not really using that. Majority of the people just watch the stock ticker itself. They'll have volume up so they can see how many transactions are occurring, and then they're gonna have maybe VWAP or a small moving average just to have trend analysis and know what the sentiment is on that stock. What I Before I get into anything, because this is kind of how I want to introduce today, I want you guys to really start thinking about simplifying your trading to the point where you're just focusing on price action. And when we covered price action initially, we covered price action, the actual candlesticks, what they mean, bullish, bearish, based upon the candle closures. And that's incredibly important. That's thing one. Thing two is going to be looking at the other side of it, which is volume. You may have the most beautiful candle closure possible, right? You may see the most beautiful continuation candles that are pointing, oh yeah, we're going up higher, right? But then you look at the volume, right? This is volume over here, and you see this very, very low volume, right? To me, right, that will invalidate how good those candles look, right? Because at the end of the day, right, one of the most important things about about a stock, the two most important things about a stock is the price of the stock and how many shares are traded of that stock. Those are the two most important things, volume and the price itself. So that's why volume price analysis is perhaps one of the most important concepts of price action, right? Understanding how many shares are transacted to produce that candle, right? Because you may have the most beautiful candle being produced and you see it and you look at the volume and it's like, oh shit, this is no volume, right? So let's actually talk about that and jump into today's session. But the important part about anything, before we get into anything, is start simplifying your trading. Make it simple. Look, I've watched other YouTube videos. I've seen what people do. I've seen how they trade. I was on Instagram today. A reel popped up of some guy who is quote unquote making $6,000 on one trade, and you can clearly see it's a live recording of him trading, and I could very quickly see on Thinkorswim that that SPY ticker doesn't have a little 24 at the end. It was a paper trading account, right? And the guy has, I think it had like 6,000 likes on that video. And so much bad content is out there. You really have to start thinking about, what are the intentions of this person making this YouTube video, the intentions of making this Instagram reel content. What are they intending to do with it, right? 9 times out of 10, they have malintentions. They're there to sell you something. They're there to get you to buy a course or generate ad revenue. And yeah, sure, obviously, maybe I'm not any better, right? But the important part is make sure you are looking through content from people who are really profitable traders and not just Fugazi, creating content to spike interest, right? Very, very important. But let's actually jump into it. So we talked about price action last session, and we talked about the idea that you guys already know this, right? I don't even want to spend too much time on this, but candlestick analysis is very simple. We covered it last session, and it was a great session because we covered pretty much everything you need to know about the actual candlesticks themselves. Now, volume is different. And I know you guys are probably expecting there to be a slide here, and it's a completely blank screen. And it's there's for a reason. The reason why is because we're going to draw this out instead. Volume, and this is horrible handwriting. And trust me, I know I don't make money off my handwriting, so we're just gonna have to deal with it. But volume, Jesus Christ, it's horrible. Volume represents the number of shares being transacted. Every volume tick, so one volume tick, right? Every time there's one volume tick on that volume bar, right, which I'll show you in a second, each volume tick is a transaction, right? One volume equals one transaction. It's the same thing. Now, one transaction is a buyer and a seller coming together. A buyer, right, who's coming in to buy shares or buy that option or buy that contract, and a seller who is going to allocate that contract to somebody else. So often people misrepresent what volume is. They will see volume as a green candle and they'll say, oh, yeah, this is a green volume candle. Obviously, this is a blue volume candle, but let's just say this is green, right? Hypothetically, this is a green volume candle. They'll say, oh, yeah, this is all buyers, right? This is all buyers here, right? But the thing that they're missing is that's not buyers. That's a buyer and a seller. There is no such thing as bullish or bearish volume if you don't look at it when paired to price action. Volume price analysis only works when you pair it with price action because you don't know, right? You don't know the dynamic between buyers and sellers until you pair it with price action. I'll show you what I mean by this, but it's very important to completely throw out any notions, any sort of idea that there's a such thing as bullish or bearish volume, because how could there be bullish or bearish volume if there's a buyer and a seller, right? If I'm buying Apple shares, somebody out there is transacting it. Somebody out there is selling me those shares, right? So does that mean somebody's bullish and someone's bearish and that one of us has the upper hand in that volume? No, right? It's just a transaction. So that poses the idea, how does volume help us? If it's not bullish or bearish, how does it help us? Well, it helps us because it generates one of the most important things, which is interest, right? It's interest. Interest is the most important thing. Price interest or demand, whatever you want to call it. Interest is what I call it, right? So interest. When you see when you see a lot of volume in a stock, that means there's a lot of interest or a lot of activity occurring on that stock, right? And naturally, you're going to see that when a stock, if you go back to the basics of what's called, that's my Facebook. I don't think I've heard that notification in a long time. Let me mute my phone. But if you go to the basics of auction market theory, AMT is auction market theory. It's going to show you that the idea of auction market theory is that, well, you have a stock that's in a range, right? So let's just say this is an Apple stock trading in a range. Well, the idea behind auction market theory is that in this range, right? You're going to see a lot of sellers step up in these zones, right? And you're going to see a lot of buyers step up in these zones, right? And what this is going to do is it's going to produce a lot of volume on those outer edges of that range, right? So when you see a stock approach, let's just say Apple approaching 195, a huge level, right? This is a huge level here in Apple, a very, very massive level of resistance here on Apple. When you see it approach that level, you're going to see a lot of volume spike up as soon as you touch that 195 level. And that's not bullish or bearish. That's just interest. That's just activity occurring at a very key level because naturally there's going to be a lot of interest at a key level. Why? Because there's going to be a lot of people taking profit, a lot of people buying the breakout, a lot of stuff happening at these key areas of interest. It's not bullish or bearish. Now, where does this shift? What is it? So what can I do with it now? Well, what you do with it is when you see a stock clear a key level and has clearly shown us that it's pushing above that key level, you then look to analyze volume, which represents the number of shares being transacted, to be increasing. And the reason why you look for volume to be increasing on breakouts, not just at the breakout, but over the breakout, is because you want to see interest. You want to see interest and more transactions occurring. Oh, that's an N, not H. Interest transaction, more interest occurring over that key level. So you want to see volume not only spike at the key level, but you also want to see it above that key level, right? More volume coming in, more interest coming in, more transactions, more liquidity occurring above that key level there so it can continue, right? That's the idea, right? So to repeat myself there, volume is never bullish or bearish, but when it is priced when you pair it with the actual stock itself, right? And you see, okay, well, Apple just cleared 195 and you're seeing, well, there's no increase. There's a little bit of increasing volume at the breakout, but as soon as it broke out, there's no volume, right? There's no transactions occurring here. It's very illiquid, right? And what that means is it's not likely to give you a strong continuation. Sure, it may continue, but it becomes less likely, and you don't have confirmation or volume confirmation. Volume confirmation is what gives me personally. I have probably close to an 80-85% win rate when I trade, maybe higher some weeks. This week, I didn't take a single loss this week because 9 times out of 10, I'm using volume to confirm my entries. And it's usually going to give you a good view at what's happening in the stock, right? So what I want to do is I want to continue on this presentation and I want to show you some live examples. But let's continue here. And I want to talk to you about something very, very simple. The very simple thing that other YouTube videos will show you guys is that high volume candles are follow through candles and low volume candles are reversal candles. And that's exactly right. It is right. It's 100% right. But it's very important to not just look at these candles as that's bearish and that's bullish and that's bearish and that's bullish because that's not how things work. What does work is you need to start looking at pairing the volume with a chart itself. So when you see Apple clearing 195 and it just cleared 195 right over here and it produces this green candle and then this green candle thereafter, that to me is bullish, right? That to me is bullish because we're producing elevated volume through and above that key level indicating continuation. That is what matters, right? We want to be looking for elevated volume at these breakout levels or at these reclaim levels and looking to see if it's usually between 20 to 30% elevated volume above these key levels, because that is what shows us real buyer interest. This is what matters when trading. The RSI, the MACD, the blah 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 blah. It, it may help you, right? It may help you, but volume is going to be what shows us the number of trades. It's real, it's empirical, right? It's going to show us how many freaking shares were transacted as Apple broke 195. If you're seeing that, oh, well, Apple broke 195, but it's producing these volume candles. Let me ask you guys in the chat, if it produced these type of candles, these two candles, is that indicative of continuation? What is it? What is it to you? Yes, it's green, but it's not indicative of continue. Exactly, right? What is it indicative of, right? It could be continuation, it could continue, or it could reverse. The issue is that it's a 50-50. This is the issue. I don't know. Like I if I see that, I just don't know. Like I couldn't tell you. You could put a gun to my head and say, is this gonna go up or is it gonna go down? And I wouldn't know, right? But if this was produced, right, this over a key level, this is probably the odds are close to 80-20, right? That it's going to continue over that key level. And that's what I want to focus on, right? A lot of times people will see, yeah, it's a breakout over a key level, but we just don't know, right? We don't know because the context is one, the stock price, is it clearing that key level? And then two, what is the volume? Is the volume producing large? Is it uptick in volume over that key level, or is it a very stagnant volume like this example to the right-hand side? This would be indication of maybe reversal, maybe follow through, but we just simply don't know. It's a 50-50. And over here, this would be indicative of real serious continuation. That is what we look for. It's more of a simple way to do things. And like that for me, this is what's worked for me. We went over this already last time, so I'm going to skip over it. These charts are super zoomed out, zoomed in, but I don't even want to spend too much time on this. I just wanted you guys to see this bar chart so you guys can see it. It's a line chart, looks horrible. I don't know why my presentation is zooming in slowly right now. It's just bizarre, really weird. But it's important to recognize the fact that as a stock is increasing in price, if you see that there is increasing volume, that's indicative of continuation. It's still zooming in. That's so bizarre. If you see the stock price is increasing in price, let me just jump out of this and come back in. If you see it's increasing in price and then the volume is coming down, that's not indicative of continuation. It's indicative of this breaking down. This can very easily reverse, right? So just be cautious of that. Volume represents the number of shares being transacted. So if you see the stock price is going up, but volume is detached from that, meaning that there's less interest in that stock as it's going up, that's reversal, right? So that's what we have to be watching out for. Again, you can see here, this is I don't know why it zooms in like that. So bizarre. This is an example of a breaking out. You guys can't even see anything here, so I really don't want to spend time on this. This is pretty horrendous. If I do this though, there you go. Beautiful. Awesome. So here in this example, right? Can you guys see the screen now? Is it a bit better? Can you guys see it? Okay, cool. So bizarre. I don't know why I use this system. So in this example, right, I'm just showing you guys a line chart. I know it's not a real chart. I'll show you guys a real chart in a second, but it's important to see, right? This is what matters, right? You see a stock clear key level, and look, you can see, right? Look at this, right? Look at the fact that every time we hit this key level, there's elevated volume, but that's not interesting to me, right? This is just showing us that there's upticks in volume, right? Upticks in volume, upticks in volume, upticks in volume occurring at key levels because there's a key level, right? There's going to be a lot of transactions occurring at key levels. Now, what matters is when the stock clears that key level, we not only want to see it produce a big breakout candle on that breakout, we see elevated transactions on the breakout. We also want to see elevated transactions on that second and third candle. This to me, these two candles are the most important candles, right? I don't care about volume at all until it then breaks out. And when it starts breaking out, this is where I become interested and start analyzing volume, right? And saying, okay, what's happening here? Well, we see an elevated volume candle breakout. Okay, on that second candle, I'm likely getting in. And when I see that second candle produce green candle elevated above 20 or 30% above its average, that to me is bullish, right? And that's what makes it bullish, not because it's a green candle, but because it's elevated volume above a key level, showing us that there's buyer interest, and there's liquidity above that level. And that's what I look for, right? And I think that's what you guys should also look for as well. That's what will make you have more confirmation in these trades. Again, it doesn't just happen on the upside, it also happens on the downside, right? You can flip everything I just said and use it in the exact opposite way. You could use it in the same sense, right? The stock breaks down on a key level. What do you notice? Well, shit. There is volume at these levels, right? But that's not interesting to me. It's interesting to me when this happens, right? When we break under that level, I look for elevated volume. You can see, right? Look how beautiful this is, right? Elevated volume as soon as it breaks that key level. Continuation, right? More elevated volume under that key level. Again, another candle, right? And then look at the green candles printing. Are these bullish candles? Absolutely not, right? Because these candles are lower than the breakdown, right? So if we pop back into that supply or that resistance, we can absolutely look for shorts there for a move down, right? Very simple, basic view of how volume price analysis is used to help us gauge these trades. But what I want to do is I want to start showing you guys actual live trades, and some real charts that we have, for us to go off of. But before I do any of that, do you guys have any questions, or anything on before I move on? Anything else before I move forward? Does time frame matter? Absolutely. I use for all my volume price analysis, I just like to keep things simple. I use the 5 minute time frame. So for me, that's what I use. Am I right by using the 5 minute time frame? For me, that's just what has worked for me. You guys can choose to use time frames that you want to use. I would say I see other successful traders using the 2 minute, the 3 minute, the 5 minute, the 15 minute, and then anything beyond that, volume becomes a little bit iffy. That I like using on the 5 minute the most. That's my bread and butter. But feel free to use it in any other way, any other which way. How much volume do you look for? Johan, go back to this slide, right? So it depends on the previous candles. I wanted to see, oh, I can't, well, let me go back. It depends on the previous candles. I want to see it 20 to 30% above its average, right? So that's usually what I look for, right? So for me, what's considered elevated volume in this chart? Well, this is elevated volume, this is elevated volume, this is elevated volume, and this is elevated volume. That's it, right? All I'm looking for, it's purely visual. That's to me is what elevated volume is. You could use what is known as a volume MA, volume moving average, and it may look like this in your chart. Anything above that volume MA would be considered high volume. Anything below would be considered low volume. That's another way to use volume pretty efficiently. It's called the volume moving average. On the chart, what I want to do quickly is show you guys the indicator that I actually use. So the indicator that I use is the volume, is just volume, right? So if you go to indicator, if you go to TradingView, then go to indicators, type in VOL, UME. It's this one right over here, right? Volume. Now, once you click on it, you can add what is known as a volume. You can add what is known as a volume MA. And what this will do is it will add exactly what I was talking about, right? You can see anytime we are 20 or 30% above this volume MA, we are above average volume. Anytime we're below it, we are below average volume, right? Simple, easy, effective way to analyze volume. But for me, I don't use volume MA. The reason why is because for me, it's just visual, and I could see it without using that line in the chart. But you totally can. I used it for a long time. I used it for like the first 2 years of my trading. I had a volume MA, so feel free to implement it if that helps you visualize it a bit better. All right. So what I want to do is I want to start going over some actual charts with you guys. Um, yeah, let's go over some actual charts. So I have some live trades that I'm going to go over. I have two live trades on AMD and on Microsoft. Then I have some other examples. This was a live trade from, I forget when this was from, but we're not going to go over this one. I'll skip that one. I'm gonna save this one for a YouTube video. And then this one is the first example I want to go over. Actually, no, let's do this one first. So AMD. Volume matters. So the first thing to understand always about volume is that volume is always going to be elevated at the open. You're always going to see elevated volume at the open. The open and close. So between 9:30 and 9:40, you're going to have elevated volume. And between 3:45 and 4 p.m., you're going to have elevated volume. And this is all Eastern Standard Time. So that's 0 a.m. So anything in between here, this is going to be your crazy volatility candles. And the way to gauge whether it's high or low volume at the open between 9:30 and 9:40 and 3:45 and 4 p.m. A very simple and effective way to analyze whether it's high volume simply right at the open is you're going to have to compare it to that previous day volume. So you're going to have to zoom out and you're going to have to look and see, well, hey, what was the volume that previous day, right? So for example, if we can go to Meta's chart, right? And want to say, well, is this opening bell volume elevated, right? So we'll look at the first two candles. Well, based upon here, it's elevated. Like this is elevated volume, right? But if you compare it to the opening bell volume the previous day, you're going to see, well, damn, that was absolutely not elevated volume, right? This is quite low volume off the open on Meta. And the reason why we know it's low is because we're comparing it to the previous day. So quick and easy, efficient way to gauge whether volume is strong at the open is use that previous day volume to measure whether it is high or low. Okay, so going back to this chart here in AMD, I want to zoom in here so we can all see it pretty nicely. That is too zoomed in. Let's just use it like this. Okay, we'll use this. It's fine. Can you guys see the chart? Is it big enough for you guys, or is it too small? Is it big enough? Can you guys see it? Good. Okay, cool. All right. So what I want you guys to do is I want you first to realize that I'm analyzing this in the 5 minute time frame. So 5 minute time frame is what I'm using to analyze the volume here, and we're watching the volume bars in the bottom. We're not only watching the volume bars in the bottom, we're also going to watch the candle closures, and we're going to see how strong these candles are over these key levels. And we have two levels here in A and B to watch out for. We have level 1 here at 123 and level 2 here at 126. These are all trades. Oh, that's also, hey, this is a 2. Level 1, 2. These are trades we had taken from this week and last week, but I don't want to go over the actual executions. I just want to go over the levels themselves and talk to you about volume as we're clearing these levels. So we see that it opened on pretty strong volume here in AMD. They were traced off that key level, which is good. You usually want to see that. That's nice. It's showing you how important that 123 is. So we know it's an important level. And we know that what we want to see is we want to look for that break and retest above that level for continuation, right? That's what we're looking for. And we know that if we get above 123 on high volume, on strong candles, we could see a pushback at 126. So let's play this chart and let's see actually what happened here as we progress in this trade. So we produce a candle here, and I want to start jumping pretty quickly. So a little too far. Shit, you guys saw it. I didn't want you guys to see that. But you can see here, it's right here, right? I want you guys to focus on the first thing. And the first checkbox for me that I look for is I look for the breakout, right? So this is the breakout candle. And this to me, this is good, right? I want to see elevated volume like that. This to me is bullish, right? This to me is already telling me, yeah, I can look for that pullback and long continuation higher. The reason why is because what do we have, right? We have elevated volume, right? We have elevated volume over key level. Now, and granted, it's not huge volume, but it is elevated volume. And I do want to see increased price interest as we're pushing new highs, as we're clearing and closing above the key level. Not only that, but tie it into our first lesson. Remember our first class we had back in 2 weeks ago? We talked about candle closures. This is a full body. This is nearly a full body candle closure, right? This to me, it is extremely bullish. So I'm going to look for continuation based upon this candle closure, based upon the volume giving us serious price interest. This is what I look for. Now let's look for this next candle and see if we also get elevated volume. You can see here, let's use that 934 candle. Let's just continue this quickly. And you're going to see, well, what do you notice about that second candle, right? The second candle is showing us the same thing, right? It's showing us not only do we have increased volume over the key level, we are at the key level, we've increased volume over the key level. More transactions, more T, it's not a T, more T or transactions is occurring as the stock price is pushing new highs. This is absolutely bullish, right? This is what we look for as price action traders. We look for volume and price interest to be increasing as we are clearing these key levels, not only at the key level on the breakout, but above the key level on that continuation candle. This to me is saying, hey, hold your longs or look for a pullback for a long continuation. Is this starting to make sense? Can you guys kind of understand what I'm saying here? Put a yes in the chat if it makes sense. Iron Trader, this is giving you a loss of momentum. No, well, this is still strong momentum, right? You can see, look at the volume progressing as we're clearing that key level. Momentum's gonna come in eventually, right? Momentum may be apparent to you immediately as a trade clears a key level. It's gonna take time for that momentum to progress. Give it give it some time, right? It's showing us initial signs of momentum building, right? And the reason why this candle hasn't closed yet, it's still being produced. And these two candles are increased volume candles over a key level. We have to give it some time. Trust me, I know this doesn't look, when a trade looks to be setting up, it's never going to be absolutely perfect where you're going to see full body, beautiful, strong candles over a key level. It's not always going to be, sunshine and rainbows. You're going to have charts that look like this. And this is what happens a lot of times. You see charts that happen like this. And then most people will say, well, this is not enough confirmation for me. I want to see bigger candles. But then if you wait for that bigger candle, it will not yield you, it will not give you a pullback because it's just going to go. So the best thing you could do in this case is enter your longs. You just stop under 123, test the position, look for a pushback to 126, right? And then analyze the volume as the trade is progressing. So let's progress the trade and see what happens here. Let's push to not to 1040 now, and let's watch how this candle closed. The 1040 candle just closed. It's pushing higher, also an elevated volume. Now it's not extremely high volume, but let's watch and see. Well, we're printing a red candle here. Let's see how that red candle closes. Okay, we're pushing highs again. And then now you can see, well, okay, look at this, right? Now look where the volume is coming in, right? Extreme high volume candle as we're pushing new highs. Now, most people who would wait for a very obvious confirmation would say, yeah, now let's look for a pullback. But you're simply too late to the trade now, right? And as much as I agree with you, right? As much as I would say, yeah, hell yeah, this is a continuation candle. It definitely should continue from here. We're too far away from that 123 now for positive risk reward here. Because look what's happened, right? If we entered calls over here like we would have, right? We were risking this much for this much gain, right? But now if we waited for that way obvious confirmation, we now are risking this much for this much, right? Potential gain. That's the issue, right? The risk reward has become flipped. So we have to look for that early signs of confirmation as our signal and as our confirmation for entry. So let's now progress this trade. You're going to see it's likely going to push highs here. You just produced a massive volume candle pushing you highs into 126. We're probably going to test 126. Now, nobody in their right mind can tell you if this is going to reject off 126 or if it's going to continue. Nobody knows, right? And that's the first sign. If somebody tells you, if you're in another chat or you're watching a video and somebody tells you that they know this is going to break 127, 126 because that volume is strong, close out the video or leave that chat as quickly as possible because nobody knows. Now, I could probably tell you that more likely than not, this is going to continue, but nobody knows whether it's going to continue beyond that key level or not, right? So just understand that important concept, but nobody knows what's going to happen. What we do know is that elevated volume over that key level is going to give us confirmation. So we're into that 126 now. Let's watch volume as we approach 126. So let's push to 11 o'clock now. And usually on the start of hourly candles, you see a lot of volatility spike. So let's watch it. Let's watch and wait. Let's push to 11:05 now. Nothing much is happening. We're kind of just chopping around. Let's push to 11:10 and see how that candle closes. Okay. Momentum is starting to fizzle out a little bit, but we're right at that 126 now. Let's push to 11:15 and see how that candle progressed. Oh, okay. All right. Interesting. We're showing signs of rejection here off of this 126. Now, this is not bullish or bearish to me, right? We're just showing initial signs off of a 126 level. I still at this point would also be looking for another long entry here. I still would wait for a long entry here as long as the red volume or selling volume isn't strong. As long as we're pulling back pretty gradually, I'm still looking for longs here off that 123. I think that's like a fair assessment. Or I would look for a break and hold above 126. There's nothing really telling me, there's nothing really bearish about this chart yet, right? It's still particularly strong. Now, if we produced a very large red candle off of that 126, then hell yeah, right? That would be bearish continuation likely. So let's watch and wait. Let's see what happens here. Let's progress to 11:20. And nothing's happening again. Let's go to 11:30 now. Nothing's happening. Let's go to 12 o'clock, right? Still nothing happening, dwindling out. And then right there, right? right here. I want to pause it right over here. Oops, I just didn't do that right there. This to me is now becoming interesting again, right? What is happening? We just closed over 126 on a full body bullish candle on elevated volume. Now, I want to see a little more continuation here. I want to see us build above these highs a bit more before I look for longs. And the reason why is because one volume candle breakout is not going to convince me. I want to be more convinced. Like I said before, I like to see at least one big breakout candle, then a follow through candle in elevated volume. That's going to give me confirmation. So let's watch and wait. You're going to see it's a little bit choppy, a little bit trickier here in the second entry, but you can see how clear this price action is once you see, right? Okay, you're saying, okay, well, a little continuation, really kind of a coin flip at this point, but you can see lower selling volume coming to that key level. And then eventually we hold that level, but not beautifully. This isn't really as beautiful as that first example. And this to me may not have yielded an entry for me, right? Yes, I like that breakout volume, and that was probably good for confirmation for a long entry, but it wasn't selling itself to me in the same way that that first breakout was, right? Because that was a clear build over key level or over 123, and this was not really as beautiful as a build over 126. And that's okay, right? There's gonna be some times where you misjudge price action or you're just not feeling comfortable or confident in that position. And it's okay to miss out on that trade or miss out on that opportunity. It's not going to kill you, right? To miss a trade. And that's presenting my second idea here, which is Apple. And this is another key example I wanted to show you guys. This was from Friday. Um, and this was a trade where it just wasn't giving us a lot of volume, right? You can see that we cleared the key level, and yeah, we spiked. We spiked as soon as we cleared this key level, we spiked in volume. And this is all signs of bullish continuation, right? This is all signs of strong bullish continuation over 195. But I want to see a little bit more than just that. I want to see the second candle also produce high volume, which is going to show up, which is going to, if we see high volume in this continuation candle, it's going to give us a uh, sort of much higher sort of win rate on this trade going north, right, as opposed to south. In this example, you'll see here that look what happened to the volume as soon as we cleared 195. Watch what happened to the volume. Can you guys see the volume? Look at the volume. Look what happened. The volume just completely went to the trash bin, right? There is no volume anymore. The volume just completely dwindled out. And yes, the price action looks pretty good here, but when paired to the volume, this has now become a 50-50 trade. And you guys know that we can't sit there and take 50, at least for me in my system. If I don't feel like this is a 90% plus chance of going, right? I won't take that trade 9 times out of 10. If I see that there's a 50-50 chance here, because look at yes, we broke 195. Yes, we formed a bullish pin bar off that 195 level, but look how dwindled the volume is. The volume is dying over that key level, which shows that there's minimal interest. There's minimal interest or minimal buying interest over that key level. There's nothing, right? This eventually did go, right? It did go. But just because it went doesn't mean it necessarily was a good trade, right? And I think that's a really, really important concept for you guys to understand. You can see how long it took. Look how long it took, right? If this second candle bar right over here, if this second candle bar right over here was on elevated volume, this would have been a much snappier push the upside. But do you guys see how choppy it was and how long it consolidated for? The reason why it did that was because in that second candle, it showed in that second and third candle, it produced so little volume, showing us that there really was not a lot of buyer interest or a lot of interest in general over that key level. Okay. Um, Yeah, volume data, exactly. Exactly. Some of you guys are asking questions about things that are completely different from this session. So please try to this is yeah, this is the middle finger. Yeah, this is the middle finger volume candle. It's exactly right. Uh, but guys, just remember, I do these classes at least once or twice a month. So just try to keep it on this topic for now, and then we can go over other topics in a later session. But I want to focus on this topic for now. So what I want to do is I want to go over some actual trades with you guys. Let's go over this example. Let's go over this is a live trade on Microsoft, and I want to show you what I'm seeing here. Well, what we're seeing here on this example, this is Microsoft ticker, and trust me, guys, I know that the graphics here are not good, but I want you guys to focus on this chart, just this chart in the top right. And you can see that, well, I was not interested in this chart until I saw one thing and one thing only. This happened, right? And this was a clear over a very key level, 380. And we're looking for a break and retest for continuation. But I was not confirming this trade until I saw one thing and one thing only. And you guys probably know it. It's this, right? It's this. Why is it this? It's this because it's showing me, right, increased transactions, right? We're building a new high on higher volume. That to me is the most possible bullish candle I can possibly see. And at this point, I'm gonna look for any pullback for a long play, right? That's what I'm gonna look for. I'm going to enter as soon as this turns red, and I'm going to add at that 380 level. And if we push new highs, I'm going to sell. And if we pull back to 380, I'm going to add, right? And that is how I'm going to look, how I'm going to assess this trade and approach this trade in a winning mindset. And I know that I have probably an 85% plus chance of this continuing. And the reason why I do is because we are building over that 380 level. I have positive risk reward. I have positive confirmation of this trade. I can enter long on this position. So you're going to hear at some point, you're going to hear me get in this trade.
I'm gonna sell my last three contracts on Roku.
You're going to hear me get into this position. I build into this trade. And what I end up doing is I end up adding into this trade as soon as we tick back to 380. We start ticking red. I build a little bit of position here.
I
You're
took
gonna
a
see.
small
I'm gonna grab.
35s.
Yeah, I'm gonna grab some
My
contracts.
average is 1.4.
Yeah, I'm also in the 382.5 calls. So we're building a position as soon as it starts ticking red. And you're gonna notice the first thing I do is when we start ticking green, right? When we push that high right over
It's
there,
385.
right? I'm selling some, right? I'm gonna take some profit off. We took red a little bit. I'm selling some for about 15% profit, but that's not it for me, right? I don't want to just walk away from this trade with a 15% gain and that's it. I'm going to call it a day. I'm going to look still for that 380 to pull back. Right? You push new highs. I'm up at this point about 15 to 20%, right? It printed red. I got in that red candle. It pushed a new high. I'm green, right? But that's not enough for me. I'm still going to hold runners. I'm still going to hold maybe 25 or 30% as runners. And then what I'm going to do is I'm going to add to that 380, right? The reason why is because that's a retest level. We have positive confirmation, positive buying pressure over that 380 level, indicating price interest. So what we're going to do is we're going to wait for, okay, we're going to wait for
Guys are
that
fucking
pullback
moving.
now. We're gonna wait for that pullback to start adding contracts. And this is what we're doing. Now let's analyze volume
That's
again. Let's not just analyze volume on the green candles, but let's also analyze volume on the sell-off, right? What do you guys notice about the selling candles, right? The candles are pushing us lower. Well, the most important thing is to look at the size of those green candles compared to the size of red candles. The magnitude is smaller, right? And me seeing that makes me feel a little bit more comfortable holding longs in this trade off this 380 for a potential pushback in 382. That's it, right? That's how I'm going to approach this trade. So I'm going to add contracts there off that 380 level, and you're going to eventually see that. Let's see, hold on. Where did I add? I added somewhere around here, right? And then it wicked, and you're going to see it wasn't beautiful. Ended up chopping around a little bit. What we produced, what we known as again as a bullish pin bar, right? It's a red candle, but this is still a bullish pin bar off our 380 level. And then we eventually pushed new highs. Took us a little bit of time, but we eventually did push those new highs back into that 382. And that was it for me, right? It was still a nice green trade right back into high of day. And the reason why this worked is because we sat patiently, we waited for confirmation, and we got our pullback to 380 where we added our position and then sold back into new highs. So this ended up being a double whammy trade where we got our initial sells in that first green candle push above high of day, but then we added contracts as we pulled back to 380. You guys hold with me? And then sold, right?
How much
Absolutely.
are you up percent-wise?
Not a whole lot, man. But up 8% again. But oh, so it wasn't up a lot, but still a good trade, right? Wasn't up a lot in this trade, but still it was a solid trade where it was executed in a really good manner. And this is the same thing, right? This trade is also the same idea, right? But instead of analyzing this just on the breakout, I'm also going to analyze on the pullback, right? So in this case, you're going to hear in a second that I add more contracts. I get in calls on Amazon at around here, right? And then I end up adding more contracts in this zone because this is my demand zone. This is my retest level for a long play. but I'm down in my contract. I'm down about 10% right now. But I know that I'm not going to sit here and start sweating and have a heart attack because I'm down 10%. I'm going to read price action. I'm going to read the volume to say, okay, what's happening here? Well, we're pulling back into my demand, right? I'm down 10%. Volume is clearly pointing that there are less sellers engaging as we're approaching our demand. So as long as we hold our 146 level, this could retrace highs, right? So let's watch and wait. You're going to see we end up adding contracts here on Amazon. You're going to hear it pretty quickly. Let me see. Am I playing this? No, I'm not playing this. We get in more size here in Amazon because we're in
All
demand.
right. I'm taking a few more contracts here in Amazon. This is my last ad.
The reason why we did that, right, is not because I'm down 10% or not because I'm down whatever it may be. I was down about $400 at this point on this trade. Now, the reason why I did that was because we are forming a little pin bar off of our demand zone, and we are not printing incredibly bearish red candles, right? If this was going to go lower, right, it would start printing aggressive red candles here, right? As we're approaching my key level. And I'm not seeing that yet. So I still have confirmation, a low volume pullback into my demand. I'm happy sitting in longs and using a stop loss under my 145.8. You can see here that eventually this trade did chop around, but it did go for us, right? It did chop around for a while, almost wicked us out, but then pushed new highs absolutely beautifully, and we took profit into the high push. And that was the trade here, right? It's important to not only analyze volume just on the breakouts, but also watching them on the pullbacks because it's going to help you feel more comfortable and confident in these positions. Okay. That is where I want to get my stopping point. I hope that you guys learned something from today. I hope you guys learn more from one of those YouTube videos in this 30, 45-minute session. This is something I want to finish off with very quickly. It is just come with the idea that, listen, not every trading strategy is going to be perfect, right? There's going to be some things that aren't perfect. And you see it every day. Like you guys live trade with us. There's going to be times where we watch a trade and we don't get in because we're waiting for confirmation or we're waiting for this or we're waiting for that. It's not always going to be beautiful. It's not always be sunshine and rainbows, but we can use the volume and the clues that the volume are giving us to help us make these trades. And like one example, I was just editing a video from today was this meta trade that we had taken. So on Friday, as soon as I was popping off on voice, we entered meta longs. And one of the reasons why I entered meta longs was because, well, we see an extremely high volume breakout, a nice build over that key level, and we retested it multiple times, and we consolidated right into our yesterday's highs. This is probably the most beautiful trade possible, right? We buy calls here, your stop loss is on 120, 327.8, and you look for continuation, right? You have all the signs of bullish continuation in this chart. We're retesting a key level. Volume is extremely high over the key level. Pull back to our demand zone on literally no volume, right? We retain it and we push new highs. Now, granted, it would be nice here to see this green candle have elevated volume. We didn't have that, but it's okay. Not everything is going to be textbook. And you guys will begin to understand that as you get more time in the market. You're going to realize that certain things aren't always going to be textbook or picture perfect. They're just going to be little clues, and those clues will help you generate a position. I hope you guys learned from today. If you enjoyed today's lesson, just put a little yes in the chat or something. I don't know. I'm gonna record it and maybe I'll post it on my Instagram. But put a little yes in the chat. I want to see a lot of yeses or nos if it was really bad. But awesome, very cool, beautiful. You guys are crazy.